Hey everyone, and welcome to the weekly review. The path I posted on Twitter is still pretty valid for this week. It will differ in timing the micro details. We potentially had a top on Friday, uh, maybe we didn't, and we push even higher, and we actually hit that 511.72 level. And the pullback can start at any point. The best candidate is Thursday because we have PC data, PC inflation data, and a bunch of other stuff. But it can come at any point during the week as well. So maybe we do a bit of a pre-move on Wednesday or something like that. We will see. But I expect in this window from the 28th until the 5th to have some weakness in which we drop back to 500-ish. Might be a bit higher, might be a bit lower. We shall see again. And then we start the rally. There are some not so good signs, some good signs. First one is advanced decliners. This is ADRN, and this is advancing stock on New York Stock Exchange over declining stock. Uh, Yesterday it was 1.4, which is okay considering it was mostly a flat day. A flat day, sorry, not a fat day. But the concerning one was Thursday, where we had a 3% rally in Qs, 2% in SPY, and it was only 1.5, sorry, 1.5 in advancing versus decliners. And that's not a good breadth. Like a good one is something like this, which is 9x more advances versus decliners. I would have liked to see at least a 4, so it's not good. Also, UVOL DVOL was not that good on Thursday as well. So pretty strange that we got that big of a rally with little market participation. And yesterday we started more bullish, but again, it wasn't that bullish under the surface, and eventually we faded a bit of that move. It was, and considering we had a 5% VIX crush and the market was flat, this is not encouraging, and even Qs was negative. So not that encouraging. On the other hand, on the bullish side, we had a yields crush. The 20-year got rejected here. This was kind of this 463 level is kind of the top I think we will see unless something changes, meaning it gives us a reason for yields to spike higher. That could be like a hot CPI print or something like that. I don't know. On the 30-year, the TA on yields kind of thing is looking like a rejection here as well on this trend line, and target would be going back to 4%, which would be supportive. We've seen this type of behavior in the past recently with IWM, meaning yields turn first, and IWM then follows and has like this big kind of rally days. And IWM looks decent. We saved the month here. We didn't close red. This looks now like a breakout. Once goes below, breaks out again, now turns into support, and this in theory is very bullish, and this should give us a broader market rally. So if we go up, it has to be broad. It cannot be narrow like until now with only tech and semis going up. That would be a very big red sign for March OPEX and probably gives us the 10% pullback. Now, going back to SPY, because I'll talk about why things are drawn the way they are. Like I said, next week, expect a pullback in that window of weakness, which would be 28 until the 5th. Obviously, levels matter more than time right now, I think. So, for example, had we gotten the top tick on this level here, it would have been probably a good short because we hit the top and we're very close to the timing. So it doesn't matter that we hit the timing perfectly, it matters that we hit the levels perfectly. This will be the case on the way down as well. Like let's say we continue down Monday and Tuesday, and we hit like 500. I would expect we get a bounce I don't know, maybe we do it on Monday on the 26th, and then we bounce. We do a turnaround Tuesday on the 27th. So at this time, I think levels are more important than timing. And if we hit like on Monday 500 or a bit lower, I think we get a bounce afterwards. So this whole thing here changes based on hitting the levels, not on timing. Sometimes it's more about timing, other times it's more about levels. I think now it's more about the levels than the timing because we're very close to the timing anyway. So let's say as we go up, if we hit the level, I think it's fine to short. If we go down and we hit the level, I think it's fine to long. Don't get hung up on the exact thing I drew here timing wise. Okay, then we supposedly get a bigger breath rally and we go up. Target would be 520, and there's two scenarios here in my opinion. I have a rule that states something like if a directional move starts at the quarterly OPEX, it will continue until the end of the month. And I have shown this multiple times in the past. I'll show one example here. September 2022, or actually, I'll actually use March. And in March we had this one. We started a up move on March 14th on OPEX. So this started and it continued until the end of the month. We peaked on March 29th, but actually the bottom was something like here. So I would say the move started on the 8th. So basically we started an uptrend on the 8th. We didn't have a lower close after the 8th, and it continued until the end of the month. I think it has the potential to be similar now. So what I'm getting at is this one, no, actually, this one might be wrong. Because what needs to happen is either we top out before OPEX, meaning we go like say 518, 515 around the 10th. So this would be a quicker play out than what I drew here. Let's say something like this. We bounce faster, we hit the top faster, then we start going down, and the trend when we hit OPEX is down. And then we continue down until the end of the month, which is what I draw here. This is the month turn. So this will be the play out if we are weak into OPEX. On the other hand, if this plays out as is, I would expect that we don't go down until the end of the month. So we maybe don't go up that much, but we continuously hug this uptrend, maybe hit 525, and then have a pullback probably down to here to 500 uh, at the end of the month in March. So it will depend how we go into OPEX. OPEX week is very important this time. It's this one here. We have CPI probably, this is the CPI week as well, so probably the 12th or the 13th, I don't know exactly because it hasn't been announced. But this would align, like if we get a hot CPI print that says on the 12th, then all hell breaks loose, we dump, and we probably continue dumping until the end of the month and have a turn at the beginning of April. So this seems the most likely scenario to me right now. We shall see. It obviously depends on the CPI print. We'll also have an FOMC meeting on probably on the 14th. I have to look it up, but don't know. Either the 14th or the 21st. It will be in March. Oh, this is February, March, sorry. The 13th or the 20th, probably the 20th. I don't remember them doing it this early. It's the third week of the month, so the 20th. So basically, we would have a hot CPI print. We start dumping. Then we have the FOMC meeting where, because of the hot CPI print, there obviously won't be a cut. There will be hawkish positioning as well. They will say that they will err on the side of keeping inflation down, blah, 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 blah. So the market, if this is a hot CPI print, will have reason to keep going down until the end of the month. If this is a cool CPI print, the market will have reason to continue going up until the end of the month. So the next CPI print is very important. Whatever direction the market goes into on the 12th, 14th, whenever this is, on the next CPI print, it will very likely continue in that direction until the end of March, and we will get a reversal at the turn of the month. Okay, that's the reasoning behind all of this. So I think this is it for now on the market. I'll do the other video on individual stock this week. I'll see you guys later. Have a good one. Bye bye.